Welcome back. This is Mike King, and I'm here with Nigel Pusey, the CEO of Container Trade Statistics. So, Nigel, China losing share into the US, but holding strong into Europe. The boxes are presumably going from China into somewhere else. I'm hinting.
Mhm.
We've heard a lot about Sub-Saharan Africa and South and Central America as growth markets. What are the numbers?
Yeah, so Sub-Saharan Africa, as in first quarter, is still up 33%, which is incredible volumes. I believe it's something like 1 million TEUs more extra into Sub-Saharan Africa than this time last year, which is quite something. Pretty much driven all out of China, largely to West Africa, though East Africa is catching up. So that's the very big one. Central South America is up 17%. And that's pretty much largely East Coast, Brazil's, etc. And then the other one, which is slightly hidden by what's going on in the Middle East, is India, is 17% up year on year. So we've got this constant, and this has been now going on since the Q3, Q4 24, and that's my point earlier that before Trump was even in place, China had made a clearly conscious decision to start moving cargo and finding other markets because they were going to lose it out of volumes to the US. And this march into the southern regions has now continued now for pretty much 18 months, and I don't see it decreasing unless the oil price gets to the point where that it starts to affect the GDP increases in the Nigerias. So it's an investment led at its first level. It's a lot of investment coming in, but it's also an element of consumer demand as well, and that may tail off if the oil price continues to rise for the rest of the year.
That Sub-Saharan Africa up 33% really struck me. It just made me start thinking about quite a few other little other things that are going on economically. This feels to me like it's a long play
Yeah.
for China because they've been investing and building infrastructure right across Sub-Saharan Africa, or large swathes of it, for various reasons. Some of it's to get hold of resources, some of it's to build political capital, some of it's to make money on those investments. We've also seen, though, at the same time, massive investments in ports and logistics, just from European carriers as well as from China. Is that enabling these sorts of numbers, do you think?
Yes, I don't think I don't think you'd achieve this volume growth in the likes of Lagos or Timor, or if you didn't see some significant improvement in port efficiency. I mean, you can load as many boxes off you like, but if you can't get them to their final destinations rapidly, any port congestion, as we've seen during COVID years, can happen quite rapidly. So I think we're definitely seeing a massive improvement in the quality of port terminals. We're seeing 20,000 TEU ships go into Lagos, and this is almost unheard of, even 5-6 years ago. So yes, you did need port efficiency, and largely because for instance, one of the big projects that we've been looking at is this railway in the Western Africa, which is, I think they call it the Great Belt Railway or whatever, that has had this massive import of Chinese machinery going in terms of building that infrastructure project. It's a UN-based project, but China's the major supplier of goods into it because they're the only ones with the sort of machinery capability at the price they can afford. So West Africa is having a massive logistics revolution, it seems to me, at the moment, and it's going to be fascinating. We're starting to see exports come out the other side, which is a fascinating change. You've got lots of capacity going in there from the lines, which is driving the price index. I think the price of cargo out of West Africa is half what it was this time last year, and that's largely driven by lines going, gosh, we need to be into this market, suddenly getting a large amount of capacity in there, and price dropping to cope with that capacity increase.
Bigger ships, more capacity.
Yeah, no, exactly. So, and that's the way these trades work.
Yeah, I've seen that myself a little bit in East Africa. The new railway from Mombasa into Nairobi, and then there's roads right through Uganda, filling into the whole Rift Valley area. I mean, it's there's been a hangover there in terms of what people think about those Chinese investments and who's benefiting from them. But there's no doubt the infrastructure is massively improved, and that creates lots of business opportunities for import export.
And again, there, Mombasa is a classic example of a port which probably didn't function. Everybody believed it could function well. It just needed somebody to come in and manage it, who had the experience. And and there are a lot of big international port companies moving into these areas. And Mombasa's had a massive value increase. We overshadowed by what's going on in West Africa, but East Africa has similar increases in the last years as well.
Well, if anyone wants to check out a feature I did last year on South Africa, the good, the bad, and the ANC, that really does dive into how port efficiency can benefit or hinder trade. I think you can probably see what's been going wrong in South Africa has been going right in West Africa.